Hey guys, what's up and welcome to a new Tesla update video. So let's talk about the market once again, because the market today was all over the place. For the most part, it was quite flat. If anything, actually was quite green. And then apparently the Bank of England decided to post things like this, if you will, the Bank of England's governors. And yeah, the market pretty much just went for a nosedive, pretty much just straight down ever since those comments, which isn't good. That is, yeah, that definitely wasn't what we wanted to see. You can see just like it came up all the way here, it was green, and then we just pretty much plummeted down. And Tesla unfortunately made its way down instead of up off of this consolidation, which is not what we wanted to see. This is definitely a part where we wanted this consolidation to resolve to the upside, not to the downside, unfortunately. That is not good. However, with that being said and done, we are still roughly at this major resistance. We're still there. We're still at a, we're still at a pretty important part over here where we can potentially bounce, right? You can see several bounces around this area of this line, which I had here for a long time, around the 215s, right? We are pretty much at this red line right now, just slightly below it, but again, it's not drawn to the most pixel perfect, right? We're pretty much at it right now. So, we're still at a pretty important area that we can still bounce. And again, personally, I will be, if we come down to this area right here, which is around like 208, 210, and we don't bounce, that'll be kind of ridiculous in my opinion. Not necessarily, the bottom, but just a bounce, right? Mainly because also on top of everything else, guys, on top of everything else, this is like, I think it was 1, 2, 3, 4, 5, 6, 7, 8, 9 red candles in a row. And over the past like 2.5 weeks ish, we are currently down from top to bottom 31%. We're down pretty much a third, which is a lot. So that's quite a bit to drop in this short time frame, right? It's not unheard of course, especially in a market like this. However, that is quite a drop. So, mainly just taking everything into account, same way as I take into account when we just go straight up. You can go straight down. I'm still expecting, a bounce right around this area. Like, the lower we're going, the higher the chance of a bounce, in my opinion, because, in theory, we're getting to, more and more important resistances. However, on the unfortunate side, if we somehow break below this like 208-ish level, 208, like 207, something like that ish, we're pretty much going to be going down straight to 200 at least. And we'll probably get a bounce to 200, hopefully then. But the point is the fact that as we keep breaking down through these resistances, we are going to be essentially going to the next one, and so on and so forth, right? So that's just kind of how it goes, unfortunately. But yeah, this is some ridiculous selling pressure. Unfortunately, apparently I wasn't bearish enough, back when I was warning everyone all the way up here, where I was extremely bearish. Yeah, apparently I wasn't bearish enough. So that's, maybe my bad right there, I guess. Apparently, I should have been even more bearish than I was, which, sometimes, it is what it is, right? So essentially what I see right now, guys, is we are trading, more or less in this channel right here that I see right now that we're going straight down in, right? So this is essentially the channel we're in. Essentially, once we can break out of this channel to the upside, hopefully, that's when we can really start seeing our bounce. If we even get that at this point, right? At this point, it's like, who even knows, right? But pretty much the easiest way to think about it is we are trading more or less in this channel right here or right now. So, wouldn't be surprised if we maybe touch the bottom of this channel one more time, which would pretty much put us at that like 208-ish area for this ultimate bounce right here. At this rate, it seems quite probable, right? Hopefully we don't, mainly because I don't want to see that, only because, I want to see this red line hold. I want to see this red line resistance hold that we've bounced off, over here, for a large bounce. And, we're pretty much at it right now. Unfortunately, the market itself looks quite doo-doo. It doesn't look the best, let's just say that. Not the most bullish looking market in the entire world, right? This is not exactly what you want to be seeing for the market. It is just making new lows. It is just showing straight weakness. The good thing for the market itself is the fact that on the daily, as we're making lower lows, the RSI at the moment is actually making higher highs, and decent higher highs too. Like not even just again slightly higher. Like it's quite noticeably higher. Which unfortunately the same cannot be said for Tesla, as we're just making lower lows. So is the RSI, right? On the 4 hour as well. On the 3 hour, it's starting to look a little bit better. We are kind of double bottoming here. If you want to really get specific about it, we are kind of making a slightly higher low here, even though the stock is going lower. So that's technically a good sign. This is compared to back when we were at 242. So it's like the stock is just trying, but there's just some serious selling pressure. It feels like either Elon is selling or some big hedge fund or something like that is just going under or something, because we're just getting sold in like massive blocks, just like the huge red candles. Like just look at these red candles, just massive red candles, just like pushing us lower and lower and lower. Just huge pressure being put onto the stock right now, which is like very interesting. So it's either, again, Elon is selling or someone big is selling, and or hedge funds or something like that are getting pretty much liquidated, margin called, something like that, right? Maybe retail is getting margin called. That's potential as well. Another thing is maybe retail is either capitulating and or potentially also people are just having their stop losses triggered. There could be a lot of different things, and this is why usually red tends to be like really red and really fast, mainly because this snowball effect. As it goes lower, more people maybe start getting scared. They start exiting. They start getting margin called. Their stop losses are hitting, or maybe even big hedge funds, especially in a day like this, that are over leveraging, are getting pretty much just getting straight up getting called out, right? And getting margin called, liquidated, all that stuff. Combine that all together, and it just kind of escalates the selling pressure over and over and over. And I was really hoping that this base right here was like the one that will push us at least somewhat up to a certain extent, to some form of relief. Unfortunately, not yet, which is very, very not good. However, we are still sitting at potentially like a major inflection point, being this more or less red line, and pretty much this area that we bounced off of back in the June lows, which is essentially where I was talking about how I'm surprised Tesla's not here yet, because that's where the market was, right here, right? Back when the market was pretty much very close to where it is right now, is where Tesla was at this like 208 level, which we're currently at 216. So even then, Tesla is still a little bit higher relative to the market. Tesla should probably be like almost at 200 right now, very close to 200, maybe 204, something like that. If it were to be like line in line with the market, based on like where the market is now relative to the June lows. Tesla is still technically not doing as bad as the market, even though it feels like it's atrociously bad, and it is. But this is why I'm kind of saying how it wouldn't completely shock me if we come down to at least this level over here, to like bounce off of this level once again, to at least some form of relief. Again, around this 210 to 207 ish, that general range, which I'll buy more. I did buy today, and I sold another put today, and I will buy more if I have to, if we come down to these levels. And the thing is like, if we snap these levels and we just somehow keep falling lower, that is a risk that I'm willing to take, right? That is going to be something that might happen. And, if that happens, again, I'm personally not playing with, over leveraging myself. I'm not going to margin. I'm not playing some short-term calls or something like that. Worst case scenario to me is I'm just holding shares, and I can, even worst case scenario than that, sell calls against those shares, which is a bearish position, which essentially is like the shares paying you rent for holding them, if that makes sense. I just risk potential upside exposure, assuming we just completely rally from here, right? But we'll see, of course. I'm still like not ready for that. I'm still waiting to see what happens. I still haven't really technically bought any of them, because my puts don't expire until the 21st. So, I'm letting that kind of unfold as it will. But as it stands right now, guys, it's just not looking fantastic, right? The RSI, we are also on the RSI, the Bollinger Band, we're just still hugging the red line. We are starting to slowly like exit the red line. You can see we're not completely touching it anymore. We did somewhat bounce off of like the absolute bottom of the red line, which is a decent start. That means, maybe we're starting to finally, at least, around this level, show some potential form of, of a base, some potential bounce, sooner than later, hopefully. But yeah, so that's the major thing I'm looking at for the Bollinger Band, right? Moving along to the 50 and the 200, of course, the 200, you can't even see it because it's all the way up there. The 50 tried to cross the 200. Fortunately, it wasn't the case. We still got rejected, so that's still like, not fantastic, and I don't see that happening anytime soon as well. The 50 will catch up to us much faster than the 200, so that will take quite a while, in my opinion, actually, like easily months before the 50 decides to cross back over the 200, which would be a golden cross, I believe it's called, or maybe it was the 15 and one, maybe it was the 15 and 100, or was the 100 and the 200. I can't remember off the top of my head, but nonetheless, it will be still a good sign regardless. If the 50 can cross above the 200 and maintain that would still be a bullish sign. I just don't see that happening anytime soon. But that's like a very that's like an overall like macro trend look, in my opinion, as opposed to like a short-term outlook. That's just like an overall trend change. Moving along, you can see the 5 and the 10 are starting to, just completely rally over down to us. They're pretty much cratering down to earth score with us. And you can see the 5 over here, the yellow line, is starting to catch up to us. It's pretty much sitting at 228. We're still, of course, well below that, but it is starting to catch up to us. And like I said earlier, the first step would be not only to break out of this potential little downward, channel, if you will, that we are in, but on top of that, you also want to at least start breaking above the 5 moving average, and then eventually the 10. And if we can break above those and this wedge and start holding above that, in my opinion, could be a pretty decent sign as to, okay, maybe now we can finally get at least some green over here, because we've been seeing pretty much nothing but red at this point for almost like a week and a half, right? It's been 9 candles in a row, 9 trading candles in a row, not even 9 days. That's just 9 trading days, which essentially, including the weekends and stuff like that, is easily about 2 weeks, if not slightly more, of essentially just pure and utter red, right? So excuse me. It is what it is, right? It kind of is what it is, right? Another thing to keep in mind, guys, so I actually looked it up. It's actually not tomorrow. It's a Thursday. We have the CPI data coming out on at 8:30. But the thing is, with the markets selling off as they are, it almost makes me feel like the fact that the markets are trying to potentially somewhat, I hate using this, but trying to price in potentially a bad CPI. So at this rate, I feel like as long as CPI is just not hotter than expected, as long as it's at least like in line with expectations, if not maybe better, like I said yesterday, on Thursday, which is when we get that information, I do expect at least somewhat of a relief rally. But if it comes in hotter than expected, then man, that's going to be painful. I will have to start going into my reserve cash that I said I'm not touching until we reach critical levels, like the first one being this 180-ish level. If we reach 180 level, that's when I reach for one of my reserves, and if we come down all the way to 150, that's the second one, right? And that's just money that I purposely put aside, just do not touch. It's kind of like break in case of a fire or emergency. It's one of those kind of situations, right? Where I'm not going to get too greedy with it. I'm not going to buy early. If I miss the run up, it's fine. I'm already, well in advance, ahead of or in a lot of bullish positions. So that's the way I'm personally looking at it. Not financial advice. Make your own decisions. You should have your own rough game plan, right, as to what to expect and what you're okay with. Your risk versus reward, all that stuff, because we are in quite a pickle here, right? But ultimately, guys, that's essentially what I'm seeing. Again, the bounce, man, the bounce is imminent. I know I feel like I've been saying this a few times. It feels like it's back when we were up here, where I kept telling you guys, like somewhere around like these candles over here, I'm like, guys, we're going to crash. Like, I really think we're going to plummet pretty hard. And it took a few more days for that to actually play out. And that's what I've noticed I tend to always do with the market. I'm always like a few days early with my calls. And I feel like that happens every single time. It happened up here. It happened up here. I think it even happened like up here or something like that. So yeah, just, it is what it is. I know I've been calling it pretty much since I think over here was the first one, and now we're a few days out from that as well. So I want to make it very clear. I do think that I still think the bounce is imminent. I'm not gonna start losing hope or anything like that unless we start breaking these levels now over here. Then it's kind of like, okay, well, now it's not looking that great at all. But as long as we can hopefully bounce at least at the very worst case scenario for the short term off of this kind of 210, 208 or 7-ish level and hold and break out of this wedge, great news. That is fantastic, and that's what I want to see, and that's what I'm purposely waiting to see if it happens, and I still think it will. This is a quite aggressive selling, and again, when you have aggressive buying, you're gonna have something like this happen, and when you have aggressive selling, you'll have something like this potentially happen. Maybe not to this extent again, mainly because of the macro, but I definitely think we'll get some nice juicy green coming up shortly. So again, I think it all comes down to the CPI day on Thursday, guys. So as long as it doesn't come in hotter than expected, I think we can get some green. But other than that, that's essentially what I'm seeing. Don't panic, I guess. I guess is what I'm trying to say. I know some people might be worried, panicking, whatever, and it is scary, of course. But you have to make sure you're holding on to companies you believe in for the long term, because absolute worst case scenario, you hold shares for the long term, right? It's fine. If it's a company you believe in, especially a couple of years, if not at least more than that down the road, you're going to be fine, especially if it's some money you need anytime soon, all that stuff. There's a lot of different ways that you can look at it. I'm not here to hold people's hand, but it is a scary time. So just make sure you're not over leveraging yourself. Make sure you're not getting too greedy. That's the worst thing you can possibly do. But yeah, that's it for this video, guys. Let me know what you think down below. Again, none of this is financial advice. Make your own decisions, do your own research. I'll see you guys tomorrow for the next update. So until then, peace.